Is it time to sell Sea Limited stock, or is it time to dollar cost average into this stock? The stock is down about 30% after they've announced their recent quarter earnings. It's currently trading at about $40 with a market cap of about $23 billion. For the past 12 months, they made about $12 billion of sales, so that's a price to sales of about 2, which is not too expensive. Before I go any further into the details of this video, I want to clarify that this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about Sea Limited stock. And in full disclosure, I do own Sea Limited stock at an average price of about $52. I did dollar cost average today at $47 and $40. A month ago, I made a video on Sea Limited when it was trading at about $59. I've covered a lot of details in that video, so I'm not going to repeat any of those details in this video to keep this video short. I will leave the link of that video in the pinned comments of this video. Now let's first look into why the stock is down 30%. That's because they missed the revenue estimate by about 4%. Wall Street was expecting a revenue of $3.25 billion and Sea Limited could only post $3.1 billion. That's a shortage of about $150 million in revenue, which is significant. But they did beat the earnings per share estimates and they are already profitable with $330 million of net income. Now look a little deep into what has caused this revenue miss. The main culprit is the digital entertainment segment, which is their gaming segment. The revenue is down by about 41% in that segment. So even though their e-commerce and other services revenue appreciated by 32.3%, the deceleration of the revenue in digital entertainment segment contributed to this revenue miss. As mentioned in my previous video and the valuations, digital entertainment segment is slowly dying off, but people did not expect it to drop 41% this quarter. They did expect a drop, but not 41%. So the stock has sold off. Now that we have established the cause for the revenue miss, let's look at its earnings. As you can see on the screen, they made about $3.1 billion of revenue this quarter. The gross margin is about 45%, which is impressive. The gross profit was about $1.45 billion. And look at the sales and marketing expense. It reduced by about 50% year over year. It reduced from $973 million a year ago to about $493 million this quarter. Because they reduced this operating expense, they could make a profit of about $330 million. The net income was negative $930 million a year ago. So that's a huge improvement, 135% improvement in net income. But now let's look at the balance sheet. This company has close to $7 billion of cash equivalents, and short-term investments. Based on the recent quarter earnings, we can establish that Sea Limited has the ability to control its operating expenses and show a positive net income. Now let's evaluate whether they can get back to the revenue acceleration. For that, we have to look into the individual segments again. Let's first look at the digital entertainment sector, which is the main culprit for today's stock drop. The bookings are about $443 million compared to $463 million for the previous quarter. So the digital entertainment segment will continue to lose its revenue. So that is established. But on the positive side, their quarterly active users in the digital entertainment segment were about 544 million, and that's an increase of 10% quarter on quarter. So that's good news for the digital entertainment segment. And quarterly paying users were about 43.1 million this quarter, and that's an increase of about 14.6% quarter over quarter. So that's a glimmer of hope, but we cannot confirm that the digital entertainment segment hit a bottom. In the coming quarters, we have to expect that the revenue will go down further and further. So this loss in revenue in the digital entertainment segment has to be compensated by the e-commerce segment and also the payment segment, right? So let's look at e-commerce segment. It grew by about 20.6% year over year to make about $2.1 billion this quarter. E-money has $7 billion of cash equivalents, and short-term investments, right? So they could use that money to spend on sales and marketing and increase this e-commerce revenue. So there's nothing stopping them from doing that. In fact, they said that in the coming quarters, they're going to spend more on sales and marketing and increase this revenue. So that's going to hit the bottom line, but it seems like the Wall Street doesn't care about the bottom line. They showed $330 million of profit. The stock is still down 30%. So clearly Wall Street is looking for revenue growth, and they will get it next quarter or the quarter after, right? Now let's move on to the digital financial services segment, which is their C-Money. It grew by about 53.4% year over year with respect to revenue to make about $427 million. Again, Sea Limited has $7.7 billion of cash, so they could use that to accelerate the revenue growth even in the digital financial services. In conclusion, I'm confident that Sea Limited will use its $7.7 billion of cash equivalent, and short-term investments to increase their sales and marketing spend and accelerate the revenue growth in Shopee, which is the e-commerce platform, and C-Money, which is the digital financial services platform, to compensate the revenue deceleration occurring in the digital entertainment segment. In my personal opinion, Sea Limited has a lot of levers to pull to get back to acceleration in the revenue growth in the coming quarters and years. And when they want, they can always control their operating expenses to show a positive net income. So I'm not going to sell Sea Limited stock. I will continue to dollar cost average into this stock, and I'm confident that I'll get excellent returns in the coming quarters and the years to come. Let me know your thoughts in the comments. Thank you so much for watching.